about the latest Thales movie, okay, which is Thunivu. So if you guys haven't watched, I want you all to make time to watch after hearing from me today. All right, because there is important key takeaways or awareness that we should be really realizing when it comes to the reality of how things work in the financial world, when it comes to banks, when it comes to mutual funds and so on. So I just thought that this is my duty to bring awareness to all of you who might overlook these key messages or takeaways that is projected in the movie. Okay, it's not only about this particular movie, but most of the Tamil movies or even Hollywood movies, there is a lot of hidden or subtle messages that is being projected for us to realize, for us to be aware on our day-to-day life. Okay, it's hidden in plain sight. If you really pay close attention to the storyline or the narrative, or even some of the dialogues that they use in the movie, there's a lot of message for us to learn, for us to realize on certain things in our life. Okay, the best example is if you look at the movie Matrix. Okay, it's actually very true whatever that they are saying in the movie. Okay, so but in regards to this movie, which is about financial aspect, okay, I'm going to highlight some of the takeaways, okay, which I believe is important for you all to take note or to be aware. Okay, most of us go watch a movie on cinema and we just leave it right there after the movie ends. We fail to see some of the important takeaways or hidden messages in the movie. We just see it as an entertainment. Okay, so please pay close attention on whatever that is happening in the movie, mostly on the villain side, on the bad situation side of it. Okay, so these are some of the takeaways that I was able to take note from watching the movie. So the first one, truth hidden is also a lie. Okay, there were a few dialogues that the villain said that they lie, they hide the truth. Okay, is also a lie. That's what you need to understand. Okay, I couldn't really story to guys the exact scene that happens, but just pay attention to these 5 takeaways and go watch the movie. Okay, truth hidden is also a lie. That's the first message that I get, okay, that I saw in the movie. And second, terms and condition. By signing contract, we usually fail to read contracts. And if you look at on a day-to-day life, whether if you were to get a telecommunication plan, whether if you were to sign up that, or if you were to sign up any membership, when it comes to loan, acquiring house loan and so on, there's always a terms and condition, a contract for us to sign, which is usually very thick, which usually we do not go through. Even if you were to buy insurance, there's a huge contract book, right? Most of the time we will not read, because that's where all the terms and condition lies. This is how the corporate company work. Okay, so these are all I'm not sure what's the right word to say, but it's actually a sad thing that they fail to be transparent. Again, truth hidden is also a lie. It was all on purpose. That's what you and me need to realize. So it is our duty to be responsible, to be aware as a consumer. So third point, corporate world and government, the relationship. So if you watch the movie, you will notice the relationship between the politician, okay, the minister, the relationship between the bank's CEO, okay, and also the corporate company, the media. So these are all basically corporate company under the same roof. The government, the media, the banks, the politicians, and so on. So you can really see how do they work on the behind the scene. So it also applies in our day-to-day life. Okay, it's not just about the movie. Most of the time, movies are produced based on real life situation and story. Just that we see it just as an entertainment, we don't realize it. And number 4, consumer versus the producer. So you can see the battle between the bank CEO and also the consumer, the public. How do they approach, how do they handle the situations, what were their intention as a producer. Okay, is to basically have a profitable company. Any corporate company that we are dealing with, that we are engaging or working with, they are here to make money, not for charity. So they are basically monopolized, it's all about money and so on. So that is something that also we need to realize and also give a importance to it. Most of us might realize all of these things, but we might not take it seriously. Okay. And number 5, your money, your responsibility. Okay, that was also said in one of the dialogue, that it is not their problem, it is the consumer's responsibility, okay, to do their due diligence, to do their own research, because they did not force you to put money. They did not force you to do anything. All right, so it is our responsibility on making decision when it relates to finance. And in recent times, you might also come across a lot of financial issues that relates to banking system in Malaysia. Some of the banks that happen to be viral on social media in the past 2-3 years, people losing money, scam, uh, even e-wallet scams and so on. Okay, how weak is the security system? Because they do not really care about your money. They are here to make profit. So it is our responsibility. So for those of you who wants to be prepared on the banking side of it, what I personally do and advise my circle of people is to diversify your money. Again, it's your money, your responsibility. When something happens, you don't have any control. So please realize that the money which is in your bank, you have no control over it. It's just digits. It's just an online platform. It's just a system. Anything could happen. Okay, and you are the one who will be victimized of the situation. So a solution, what I will basically do is that right now I'm holding more cash, physical cash, than having it on the bank. Okay, that's the first step. Try to have more physical cash on your hand than having it on the bank or in any platforms. Second, if you were to have it in the banks, please diversify it across different banks or across different financial platforms. For example, there's Wise app or company, there's BigPay. You can diversify it across different financial instrument or platforms or institution. All right, so these are the basic things that you can do. All right, so but today's session I'm going to highlight particularly on investment point of view. Okay, even if you know Madan Gauri is a famous YouTuber, he also has uploaded a video on this. You guys can go and watch. He highlighted more in terms of fees and so on. But today's session, like I said, I'm going to highlight more on investing part of it. Okay, investing in banks, investing in mutual funds. So number 1, if you look at it, basically for us to make money, there's only 3 ways to make money. First is to trade time. Whether if you are employed or if you're self-employed, you need to work for money. So that's the first option. Second option is to build a business. Okay, you start off a business, could be either a service or a product. And the third way to make money is to basically invest your money. Okay, if you look at the rich side of the quadrant, the rich does have business. The rich does invest their money. So you can't create wealth by trading your time. That's the first thing you want to realize or to know. In order for you to create wealth, you need to either build a business or buy over a business, or you need to know how to invest. You need to become an investor on the long term. This is where you should be heading if you are currently employed or self-employed. So today I'm going to cover particularly on the subject of investing. So which relates to the movie, I'm going to dissect the aspect of investing via banks and mutual funds. So this, before I start, I would like to make a disclaimer. Whatever information that I'm sharing right now, it's only meant for a particular group of people. It's not meant for all of you who's watching right now. Okay, what I'm trying to say here is for those who wants to attain freedom in their life, who wants to have financial freedom, who wants to live life on their own terms, who want to quit working for money, okay, who wants to really be wealthy, who really wants to be, those who wants to really be the 5%, the 1%. It's not meant for everyone. Some of you will be satisfied by having a mediocre life, an average life, means have a house, you have a car, build a family, blah, blah, blah. That could be an average life, or that could be a meaningful life to you. There's no harm, there's no right or wrong. The question is, are you happy with what you have, with what you are doing, with where you are heading? So if you're completely happy, completely satisfied, it's not a problem at all. Okay, this particular information for those of you who are complaining, who are not satisfied, who wants to really create wealth, who wants to really create a generational wealth, who wants to be above average, who wants to experience life to the fullest, who wants to travel, who wants to have freedom, and so on. So that is a little disclaimer I'm making here. So just take what resonates with you, and know that if you can't resonate, if you don't buy into the idea that I'm sharing or the information that I'm sharing, then it's totally fine. So let's look at the term investment. So what does investing means? Investing is basically means to acquire asset that has a value in a hope or in an expectation of it producing a cash flow or it appreciating its value over time. So the basic example would be house. A house is an asset. Why? Because it could produce cash flow through rental income. First, and second, it appreciates its value over time. So a house or real estate could be categorized as an asset. So when you acquire that asset, you are basically investing. When you are having control over an asset, you are basically investing. So this is what the rich do. The rich does invest. Okay, the rich heads towards investing your money. That's their goal. And that's how they become rich. That's how they become wealthy, by investing. Okay, so what is an asset? Like I said, an asset is a resource that a person owns or control, which has an economic value. It could be a house, it could be a business, and so whatsoever. So later we look at some of the assets that the rich invest. So another condition is also is that an asset puts money into your pocket. These are the two definitions of an asset. Okay, so to create wealth, you need to invest. And what does it take for you to invest is for you to own or control an asset. So over here, you can look at the chart. This is the chart that is showing the income gap or the wealth gap over 4 decades in 1979. So if you look at the rich income, all right, you can obviously see it's where does it stands in the chart, and you can also see the middle class and the poor class. So we have in our society, we have the rich class, the middle class, and the poor class. Okay, so by looking at this graph, by now you should be asking question to yourself, what does the rich do that I am not doing, that the middle class and the poor class are not doing? What does the rich know that the middle class and the poor class do not know? Okay, the behavior, the attitude, the knowledge, and their actions. So if you are in a poor class right now, or if you are in a middle class right now, obviously, which is where I came from also, you want to ask question, you want to study the rich, what do they know? What do they do with their money? That's what makes the difference between the rich, middle, and poor. That's what makes the huge wealth gap. And over time, the wealth gap is only widening over the years. In the past 3 years, the wealth gap has even widened like never before. The middle class is getting destroyed in terms of business and so on. So why does this happen? What was the reason? Because the rich, there's only one reason, because the rich, the wealthy invest in real assets, invest in these asset classes, which I'm going to explain. So the first asset class is tangible, which is real estate. Okay, investing in commercial, residential, skyscrapers, buildings, and so on. Second is precious metal, cash and equivalents. This is where the rich invest. Cash and equivalents, it could be like investing with a fund manager, investing with anything that relates to cash. Okay, you invest with the cash, you own a liquidity. Digital or intangible, like I said, these are paper asset or digital assets. It could be stock market, which is a business, cryptocurrency, or even IP. These are IPs like trademarks, patents, and so on. Operational and business. This could be investing in a startup company, buying over companies. That's what we call as mergers and acquisition, like Google buy over Android, right? And the next one will be private equities. Okay, they invest in companies that is not publicly listed. So over here, the difference between stock market and private equities is that stock market is publicly traded company. It is open for public to invest. Private equities is like the word itself, it's private, it's not open for public. Okay, if you have your friend who's running a successful business and you own an equity that you invest in your friend's business, that is private equity. All right. Bonds, which is debt security, basically you lending money to government. You can invest or lend money to government. There's government bond, there's also big corporate bonds. So this is where the rich really invest. These are the true asset classes where the wealthy put their money in. Now let's look at where the poor and the middle class put their money in. Okay, real assets refer to tangible assets that has intrinsic value. Okay, and if we look at the definition of fake asset from ChatGPT, is an AI search engine. It's also known as financial assets that do not have intrinsic value, typically backed by a promise or expectation of future payment. This is what I want to highlight to you guys. Typically backed by a promise or expectation of future payment. That's the point here. Fake asset. So this is where we've been taught, or we've been pushed to put our money in. This is where in the category of the middle class and the poor class put their money in a hope to make money. So the simple definition of fake asset is one that promises you to make you richer, but it actually robs you blind. That's the simple definition. Okay, that brings me to another topic, which is retirement. I want to ask yourself, does retirement really exist? Is that a reality that really exists, or it is an imaginary? Ask yourself a question. Do you see anyone really retire at the age of 55 or 60 happily, fulfilling their goals, and so on? Ask yourself this question. For me, I do not see retirement as a reality. It is an imaginary. It is an illusion that has been promised to us. If you look at common financial products or financial planners and so on, they sell the idea of retirement, which does not exist, guys, for two reasons. One, due to the inflation. Okay, the money that you are investing or saving for 30, 40 years later, it should be surpassing the inflation rate. Okay, off book, the inflation rate is about 12%. Above 10%, it could be ranging between 10 to 15%. Off book, especially right now, inflation is skyrocketing. So the money that you are investing or saving for retirement should be surpassing, should be growing on top of the inflation rate. So you should be investing at least above 15%, 15 or more, for you to beat the inflation. But if your money is growing at the pace of 6%, 7%, you are actually losing your purchasing power. You are losing the value of the money that you are saving for retirement. So for that one reason, I do not believe in retirement, which is 30 years later and so on. So even, we have news like nation will need at least 1 million in savings to retire comfortably. This 1 million, by the time when you reach 30, 40 years, could be less of a value of the 1 million right now. This is inflation, time value of money. You can go and Google what does that mean. Only 3% of Malaysians can afford to retire, says EPF. So this is on the monetary aspect of it. Retirement does not exist. The rich does not invest their money for retirement, 30, 40 years and so on. And especially the rich does not invest in fake assets. Even if they were to buy a house, it's about making money in the term of 5 years, 10 years. It's not about making money in 30 years. Whether if it's by investing in house, stock or whatsoever. Of course, they have long vision, but they are also driven on making money in the short term, in the medium term, and also in the long term. Have you seen any rich or wealthy people who's living a broke life and investing for their 55 years old or 60 years old age? Not at all. So that is in terms of monetary aspect. Second, your time and energy. Your time is the biggest commodity in your life. So you having 5 million or 10 million at the age of 60 does not mean anything, because you do not have energy, you do not have time for you to experience life, for you to do what your heart desire, for you to travel and so on. So it merely an illusion. It does not mean anything, you having 10 million. And in fact, go just look out those who retire, who have attained the age of retirement. They either continue to work because their money is not enough, or they might have made a sufficient amount of money, but they'll just be at home. You can't really do what you can do at this age. So wealth is the ability to fully experience life. That is what true wealth means. So what I'm about to share with you, or what I'm sharing throughout this session, it might be an inconvenient truth, but again, that's why I say it's not for everyone, because most people will only like to buy a reassuring life. So if you really go and check out the history of how these financial products, mutual funds, insurance companies, or even there's government-based investments took place, you have to know the history. What happened during 1971? Okay, the president, Richard Nixon, who was the president of the US during those time, 1971 was the time where they depegged the dollar from gold. They brought an end to the Bretton Woods system. So for this, again, I've shared in another session, the history of money. How does central banks came in? How does Federal Reserve was established? Why banks were established and so on. So you have to really go back and study the history for you to know, how does our financial system works right now. So as soon as gold was depegged from the dollar, then they came up with employee retirement income security in 1974. You see how it all took place over the timeline. And then that's where Wall Street bond, stock exchanges, big banks, companies, insurance companies, mutual fund companies, and so on. Okay, so moving on to the next topic, I'm going to highlight now or bring your attention to the topic of mutual fund. Okay, so again, if you look at this timeline that I've shared, you want to go understand the history, and then you will realize mutual funds or many of the financial products that is out there are basically a product, not an asset by itself. It's a product that is derived from these assets, particularly stock market and bonds. So when you talk about mutual funds, so mutual funds exist in various flavors. So there's mutual funds from EPF, ASNB, private retirement scheme. There's mutual fund products in different banks with different flavors. Like I said, there's also mutual funds in insurance companies, and also private mutual fund companies. It exists in various flavors. Okay, but it is all derived from the product, as a product from the real assets. It is not this, employment retirement account, mutual funds, ETF, and REIT are not real asset. It's a derivative. You are not investing directly. You are not acquiring an asset directly. You are basically investing through a company, through an intermediary, which makes money out of you, which is, established to make profit out of you all, which only gives you all an illusion of investing. So for those of you who have all of this, you might be thinking yourself that you are an investor, but actually, if you really think about it, you are not an investor, because you are not acquiring any real assets. You are not acquiring anything that is gonna really serve the purpose of investing. So if you really look at, anyone who invests in this, are they getting rich? Are they building their wealth? There's two questions I want you to ask yourself. First, does the rich invest in this? The answer is no. The wealthy or the rich does not invest in these instruments. They invest in real assets which they have 100% control over it. Second, does anyone become rich investing in here? For example, you see an average guy who invested in all of these instruments and be able to build their wealth, be able to build their generational wealth, be able to fund their lifestyle, be able to produce cash flow, passive income, and so on, be able to, quit their job. The answer is no. So you want to ask yourself, who does invest in this? The poor and the middle class. I'm breaking it, in front of straightforward to all of you. So for us to become rich or wealthy, you need to do what the rich or wealthy do, not to follow the mainstream. Because the rich and poor invest in here, which is what contribute to the wealth gap, like I shared previously. So this is, again, I've just, experiment with the ChatGPT AI, and it is saying being very truthful. Come with their own set of limitations and constraints. One reason the wealthy may not invest, because they have often larger amount of capital to invest. So the large amount of capital to invest, it's not like few million or what. Typically, as I know, you can invest in a real assets or whatever that I've said or showed to you guys just now. It only require maybe 50,000, 100,000, 20,000. Is a matter of, below 100,000. It's not a number of millions. Of course, there is options if you have millions of capital to invest, but you can get started with, a reasonable amount of capital. Another reason is the mutual fund often have higher management fees and expenses, which can eat into returns. Okay, this is a truthful answer from ChatGPT. So if you look at mutual funds, you put 100% of your capital, okay, and you take 100% of the risk, whether if it goes down or whether if it goes down or if it goes up, you take that risk, 100% of the risk, and you only get 20% of the profit. Why? Because the 80% is eaten with hidden fees and expenses, and you have zero control over it. This is the cons, the disadvantages of investing in mutual funds, because you take the risk 100%. So whether you make money or not, they make money. The corporates make money with the hidden fees and expenses, regardless of you making money or not. Okay, these are some of the charges. They will have sales charge, in setting up your plan, the investment portfolio, and so on. They'll have annual management fee, trustee fee, switching fee for you to switch your funds. You will have redemption fee to exit your investment. They will also have agent commission. For those of you who do not know, if you are investing 1,000 ringgit through any agents or intermediaries, the money is not invested 1,000. If you're investing 1,000, maybe 800 ringgit or 700 ringgit is where your money is really invested. Another, like I said, a few percentage will be paid to the agents commission and so on. So like I said, the rich invest in stock market, but not unit trusts or ETFs. So if you to invest in stock market, you are investing directly, you are owning the asset directly, which will gives you control, which will not have much of expenses or cost if you compare to unit trust or ETF. So unit trust and ETF is basically a pool of fund, and the fund will be diversified across different stock market and so on. So usually this will be managed by fund manager. So ETF will be passively managed and unit trust will be actively managed by fund managers. Okay, I don't want to go too detailed into this because it will take a lot of time, but this is what you need to understand. You might as well invest in ETF, for me, if you ask me personally, because it often have lower expenses rate, typically passively managed, okay, and you can actively trade throughout the day. Okay, usually ETF you will be directly trading through an exchange or platform, whereby mutual fund, it involves a big company. That's why it is actively managed, and that's why you'll have higher expenses and so on. And you have zero control over it as compared to ETF. So the conclusion here, all right, you need to first educate yourself. Financial literacy is important, is the key for you to build wealth. So if you do not want to learn how to invest, if you do not want to know how the economy works, how the money works, how the banking system works, then it is no reason for you to be wealthy. There's no reason. You don't deserve that. Okay, but if you choose to be wealthy, if you want to really attain financial freedom, then you do need to educate yourself. It starts with education. You know, all these things happen because lack of education. All right, so in my other sessions, I'll be covering more other topics on educating yourself. Know the game. So I've already showed to you guys, you know, the real game that is happening, the reality. So hope that all of you have realized, please do your own research. Okay, by knowing the game, you'll be able to play their game in a smart way. So know the game, craft out your own game plan. So this is the reality. Of course, there is advantages of these mutual funds. Some of the advantages will be like PRS. If you invest 1,000 ringgit, you'll be able to claim tax. So that is an advantage. So you should be having PRS if you want to enjoy the tax benefit. If you look at insurance companies, there is option for you to buy medical card through investment link, which is a mutual fund. So that is a big advantage as compared to you buying standalone medical card. So you should be buying medical card with mutual fund, with investment link. So that's what I'm telling you. You should know the game, and so that you know how to play their game. So the whole point here that I'm highlighting is that the idea of investing, you see, the middle class and the poor class are only convinced to the idea of investing in these fake assets in order to build wealth, which is actually not. So it is fine for a beginner to invest in those, okay, to have exposure, to really feel like how does it work and so on. So if you have 1,000 ringgit or 100 ringgit per month, it is fine. But what I'm telling is that do not stop. Do not be satisfied or convinced that those are the real assets, or those are the only assets for you to make money, which is actually not. You need to go beyond that. You need to really invest in real assets. That's the whole point I'm highlighting here, is that these are just one step for you to invest your money. The first step is not the final step. Okay, there is more to it when it comes to investing your money, which will really build wealth. So that's it, guys. I think it took me about 30 minutes or so. If you want to learn more, do join my financial literacy webinar, the course that I'm creating. I'll be dissecting more topics, more financial topics, and so on. So make wise decisions, be smart, know the game, craft your game plan, and play the game. Cheers.